Good morning, students. Welcome to online classes presented by Mr. Ravi S. Kumar, lecturer in Department of Studies in Commerce, KLS Gupte College of Commerce, Belgavi. So, dear students, in today's class, we are going to discuss meaning of financial management and functions of financial management. So, before going to discuss meaning and functions of financial management, in the previous class, we studied Introduction to Financial Management, Basics of Finance, Meaning of Finance, and the scenario of financial management, and also we studied one more very important, the types of finance. So among these concepts, very important, the meaning of a finance is very important for examination point of view. And moreover, the finance is a lifeblood of every organizations. So without finance, we cannot run the business activities. So let us start with in today's class meaning of financial management. So financial management is an integral part of overall management. It is concerned with duties of a financial manager in the business firm. It means financial management is an important integral part of overall management. Overall management means what? We are going to managing the overall financial activities in the business activity. In the business, it is an activity or it is a duty of a financial manager. We'll take it one more meaning. According to the Solomon is going to define is very nicely. It is concerned with the efficient use of an important economic resources, namely capital fund. It means financial management is concerned with efficiently and properly using of economic resources, namely is given one capital fund. So dear student, when we are in the PU level and become first year, we studied what business means what. Business is an economic activity to making a profit. It means every business, the activity is what? Economic activity. Through economic activities, they are going to earning the profit. Because of that, when you are going to properly managing the economic activity, proportionately will get it a good profit or good return. So this is the main activity. So only he had given that financial management is an efficiently use of economic resources. If we are going to using efficiently and properly in a handsome manner the economic resources, we will get a good profit. So this is a the theme of financial management. According to the Joseph, one more definition, it is an operational activity of business that is responsible for obtaining and effectively utilizing the fund necessary for efficient operation. It means it is an activity is concerned with proper utilizing and necessarily necessary for the business operations. So this is called as a financial management. And in simple manner, for your in clear cut concept, I will give one simple meaning. Financial management is an aspect. It involved two aspects. One is procurement and the other one is what? Utilizing. Dear students, procurement means what? How we are going to collecting the fund. We are going to collecting the fund with different sources through debentures, shares and bonds, angel financing, venture capitaling, through commercial banks, short-term and long-term purpose, owners fund, etc. So these are the sources. These are the way we are going to procuring. We are going to collecting the funds. So once we are going to collecting the fund, and the next step is what? Effectively and efficiently utilizing the fund. So whatever collected fund we are going to using for a long-term purpose, it means fixed assets purpose, and also we are using for a working capital. Fixed asset purpose means what? We are going to purchasing assets, machineries, building, land and building, etc. And whatever part of the capital we are going to using for the purchasing of raw material, payment to debtors, and next is payment to workers. So the purpose of that we are going to using, that is a working capital. In simple scenario, I will conclude that the financial management is collection of fund and utilization of the fund. It is called as a financial management. So let us start with functions of financial management. See, basically the financial functions are described or depends on the value of the firm. What value have firm, that is to be described. Basically functions means the duties. The two types of and this is to be expressed in terms value of the firm is equal to functions of investment, financing and a dividend. We are going to defining that. V is equal to F of IFD. V means what? A value. F means functions. Bracket itself means of investment, financing and dividend. So we'll start and whatever the functions of financial management, basically two types. One is long-term functions and there is short-term functions. The long-term functions are investment decisions and financing decisions and dividend decisions. We'll start with the first one, investment decisions. Dear students, investment decisions are selection of asset in which fund will be invested by the firm. The investment decisions purely talk about the selection of asset. So at the time of selection of the asset, again they are going to deciding which fund will be invested. So I think you are going to little bit not clear which fund I am going to using word here. So which fund itself means every company have a different sources. You are again studied in the PVC level sources of finance, long term, short term, fund based or non-fund based, different finance you are going to study. So among that different sources of fund, which fund we have to be invested, that decision we are going to taking under the what? Investment decision. Again I will take it on a small example. You are going to buying a mobile. So before going to buying the mobile, you are going to finalize Samsung, Apple and Motorola. So we finalize Motorola. Okay, so selection of mobile is what? Motorola. Once we finalize the mobile, the next decision is involved with which fund, which fund I have to, which fund itself mummy also had given and papa had also given. So among two fund, which fund you want to make it a payment, you have to be taken the decision whether I have to pay mummy had given money or whether I have to pay to the seller papa had given money. So that is to be what? Investment decision. Investment decision means what? A selection of asset. After the selection of asset, which fund I have to be invested. That is what? Investment decision. And also long term. It means the long term funds are used in the project for the various fixed assets. It means the whatever we have a fund, so that fund we are going to using for what? Long term purpose. Long term purpose in the sense of every company have the different project. Yeah, they are going to introducing new project. For example, I will take it what? If I take it a Tata company, and last few years ago, Tata is introduced Tata Nano project, and recently they are going to introduce Tata electric car. Okay, so that the recent example is what? A Tata electric car. It is one of the new project. So in that new project, the Tata company, they have to decide which in which long term purpose I have to be invested. Regarding that, they are going to discuss. Okay, I think it's clear. Long term funds means among the whatever we have collected fund, sources of fund, kinds of fund, in that how much we are going to invest for a long term project purpose. And also they are going to keeping for what? Current assets also. And next is what? Working capital. After carefully assessment of project investment will be made through capital budgeting. It means after properly assessment of, it means already I am going to taking example of what? A Tata electric car. So that is one of the biggest project. So after the carefully and properly assessment of that project, what that means, what? The Tata electric car project, after the proper assessment of that project, we are going to taking investment will be made through capital budgeting. So that is very important. And among that, the part of the long term funds is also to be kept for what? Working capital. So whatever we have a long term capital, among that the part of the capital we are going to using for what? Working capital. Why? Because company the whatever the collected fund, the fully fund they cannot be invested for a long term, and they also to be kept for the short term purpose, means what? Day-to-day activities purpose they have to be maintained working capital. We will move to the next one more function, that is what? Financing functions. Dear students, financing functions basically talk acquiring the optimum finance to meet financial objectives and seeing that fixed and working capital are effectively managed. It means the main theme of the financing decisions are what? Acquiring of optimum finance, the maximum fund they are going to acquiring to meet the financial objective of the firm. And whatever it means, the financial function means what? Acquiring the maximum, collecting of the maximum finance. That is what the main decision of the financing. And whatever they are going to collecting the maximum finance, they are going to properly using fixed as well as working capital efficiently and effectively management. It is a main duty of financial functions. And also we'll discuss in general financial decisions are disclosed through what a sound capital. See, what is that sound capital means? And the sound capital structure, it means what the financial manager needs to possess a good knowledge and the sources of available funds, their respective cost, and need to establishment of that. So that will be defined the sound capital structure. In simple scenario, the sound capital structure, it is a proper balance between equity capital and debt. So that is to be defined what a sound capital structure. The sound capital structure, it is one of the decision of a financial decision. Why? Because if a manager, they are going to taking a proper decision regarding the financial optimum acquiring the finance or acquiring the fund at the time of proper knowledgeably, he has to take the decision regarding proper equity collection and proper debt collection. Proportionately, the company have a good capital structure. Okay, we cannot have more capital also, we cannot have more equity also, we cannot maintaining more debt also. Proportionately, we are going to maintaining equity as well as debt. That is to be defined what the good financial structure. Okay, the good financial structure, it is a part of the financing decision. If you are going to taking proper good decision regarding the acquiring the fund, so that will be defined, that will be disclosed the what structure of the finance is to be company have maintained. We'll move to the next, that is dividend decision. In simple concept, dear students, dividend decision, it means it is a determination. Investment decision will selection, and finance decision is what acquiring the fund, and the dividend decision what determining or calculating or finding as to how much and how frequently can be paid out of the profits of an organization as an income for its owner or shareholders. We are going to calculating here how much and how frequently we are going to making a dividend to the shareholders or owners of the company. That is what a dividend decision. If you are not paying proper dividend to the investors or owners or proprietor, they will not be continuation of the business. They may quit and they will move to another company. And what will happen? The financing portion of that company will be collapsed. The industry will be dissolved. That is one reason. And second reason, if you are going to maintaining proper dividend payout or proper return given to the investors, and they will be happy and they will investing more and more and they will remains in the organization. So only the determination of the dividend payout is very important in the organization. That decision we are going to taking under the financial management. It is my point. So the dividend determination, the dividend calculation, it means how much and how frequently we are going to paying the dividend to the investors. That is we are going to taking decision under the financial management. See, dear student, how financial management is very important in the company. The subject is only financial management, how the things are involved here. Okay, investment decisions how is very important, and financing decisions how is very important, dividend decisions. And the dividend decisions are the owner of any profit making organizations looks forward for his investment in two way. Of course, if any investment of the organization, they are looking into the two way. The one is growth of the capital invested in the organization and capital payout as a income for solo proprietor. They are all, every investor they are expecting to, one is growth of whatever I invested capital in that organization. So what is the growth of my capital? And also they are going to thinking what is the payout capital for payout cash for my income. So these two aspects. And one more, the dividend decision thus has two elements, basically two elements of dividend decisions. The one is what amount to be paid out and amount to be retained in the business. Very important, dear students, when we are going to talk about stock exchange or stock markets, this is very important. Why? Because if the company is paying proper dividend, okay, that is one point. This is one element. Whether the companies, whatever the payment of dividend, they are to be retained in the business in the form of giving bonus shares, splitting the shares. Okay, in the different any other methods, they are going to retaining in whatever, instead of paying the dividend, instead of paying the profits, then they will be retaining in the business in the name of my name. That is two elements of a dividend decision. Dividend decision are two elements. One is retaining the business and there was what a proper payment. Shall I give you an example? For example, I am going to announcing 2 rupees profit for my industries. You all are my investors. So whatever the 2 rupees profit, the first is whether I have to make it a 2 rupees payment to you people. This is one of the element. Of course, as per the rate of interest, I am going to declaring dividend to the investors. This is one method of element. Another method is instead of giving the 2 rupee dividend to you all, that 2 rupees remaining I will be remains in my business in the name of you all name. Instead of already we have 100 shares, so again I will add one more 2 shares. That 2 shares is that is your profit. Instead of giving the profit, that profit is converted into shares. That is retained in the business. These are the long-term decision, dear students. We'll talk about one more, that is short-term decisions, short-term functions. See, every company have a short-term functions, that is working capital management. Generally, short-term decisions are reduced to management to current assets and current liabilities. See, working capital is connected between current assets and current liabilities. Every company, they are going to maintaining a portion of capital for the purpose of day-to-day activities of a business. And regarding working capital, we will study it in detail in the 5th unit. So dear students, now I am going to conclude the functions of financial management is very important for knowledgeable. Financial management is an art of managing the financing activities. And functions means what? The functions are connected with the value of the firm depending on the investment decision, financing decision, and dividend decisions. So thank you. We'll meet in the next class with a new concept, that is objective of financial management. Thank you.